You're listening to Pre-Market Prep. I'm Brianna Valesky in for Joel L. Connon. I was just kidding earlier. We're actually on the line with Ryan Craver. He is a retail expert as well as the Senior Vice President of Emerging Brands and Digital at Lamour Group. Ryan, thank you so much for joining us on the show this morning.
Good morning, Brianna. How you been?
I'm doing great. Benzinga just moved to our brand new office in downtown Detroit. I am looking out the window at Woodward right now. It's a beautiful day in the city. It's a beautiful time to be in our new office, so we're doing great. But we want to talk to you about retail. We got some of our retail sales figures out late last week. Can you kind of give us your, what some of those figures were and what your take on them was?
Great. First and foremost, I think that what was interesting is the year-over-year trend of up 2.5% remains intact. I think a lot of people were upset with the fact that we didn't see a sizable increase from August to September, and that only came in at 0.1%. But with that said, I think if you look at where the strength was, it stayed in the same places that it's historically been in. I think auto was very, very strong. I think furniture and home furniture stores did very, very well. If you look at the non-store, which would include the guys like Amazon, it continues to post results plus 5.5%. Electronics was very, very weak. Gasoline, as expected, was very weak. And then surprisingly, we saw department stores actually post a positive comp for the first time in at least 6 to 8 months. So that tells me that back to school is probably stronger than we had originally thought, and that's probably what saved them. Overall, I think it was a fine month. I think that it was reported that it was quite weak, but it was actually fine.
Oh, that's great. That's good to hear. What does that kind of economic indicator tell you about the economy in general, if anything?
I think what we were worried about is that we were going to see the wages driving no actual growth. But if you look at what we've seen with the 2.5%, it's actually not impacted us just yet. With that said, we're moving into October, November, and December, which retailers typically do about 60 to 70% of their overall business in those 3 months. So if we don't have a strong October, I think we're going to see if the wages not going up are actually impacting spending.
Yeah, great. That's exactly what I wanted to ask about. If you had any sort of preview of your expectations for the holiday shopping season.
Yeah, I like to stick around the three main retailers that I think that are performing best right now.
Sure.
And I use the acronym of ACE. The first one's obviously Amazon.
All
I think they
right.
will continue to drive very, very strong online sales. I think the plan to have a massive Cyber Monday will definitely be exceeded. I know that they've been reaching out to a lot of brands already for a lot of prep and to start the promos a lot earlier, so we should see a lot of strength from them. The second one within the acronym is Costco. You pull the gasoline out of Costco's results and you're still seeing 7 to 8 and sometimes 10% increases in actual comp sales across multiple merchandise categories, which is very, very big. And then the last one is Nordstrom. So Nordstrom is the one department store that's actually got positive comps. You look at the Kohl's, you look at the Macy's of the world, they're either flat to slightly down. And I think that Nordstrom is performing very, very well digitally, which is driving their actual comp to be positive.
Let's talk about some of the other retailers that we have mentioned. How about Kohl's? I mean, I used to shop at Kohl's way more years ago, but now I feel like, product offerings aren't that great and they seem a little overpriced.
So Kohl's is interesting in that I think it's definitely a value play here.
Okay.
They've got that national value, and they've got that national footprint that a lot of the other retailers don't necessarily have. They are struggling in that they're moving and shifting to more national brands. Previously, what they had done was they had a lot of specialty brands, but now they're trying to shift what's on the floor into bigger national brands that don't necessarily need the same amount of marketing. I think that they are right between a premium department store and the discounters like the Rosses and TJ Maxxes of the world. And they're sitting right in there. So your perception of them being slightly higher in price is probably true because you see the TJ Maxxes and the Rosses stealing a lot of the bargain, treasure hunting sales that are really, really hot right now. But with that said, strong dividend. They are very, very close to bottoming in my view, and I don't think there's a lot of issue in picking some up for the long term.
Well, let's talk about some of the other discount retailers. I know you had your eye on things like Ross Stores and TJX. How are those performing right now?
I think they're still doing very, very well. The customer is highly sensitive to promotions and discounts right now. They are in the hot spot of retail, for lack of a better term. And you see some of the larger ones like the Kohl's and the Macy's coming out with outlet versions. I think specialty discount is definitely not done. I think we'll continue to see the customer excited by that format. And I think what that ends up doing is just giving pressure off to department stores where it would typically go. TJX is doing very, very well, both internationally and within the U.S. They're doing phenomenal. I think what you saw was it hit above 75 at one point, and it's now starting to tread back up. I think if they see a good holiday, they will continue to see it rise up and get closer to the $100 level.
All right, let's talk about some of our, you mentioned Amazon already, some of our more retailers that are less related to clothing. What about GameStop? I know we've talked about that on the show before.
Yeah, so I think GameStop is in a unique position in that they will have a fantastic holiday, given things like the PlayStation 4 bundle going down, the fact that electronics are likely to be the largest category for purchases this coming season. I think Star Wars definitely bodes well within their camp. With that said, I think longer term, a lot of their game sales, whether they're used or whether they're new, I think a lot of that is shifting to online. I think what's interesting is you see the major game makers like Electronic Arts coming out with games early if you're buying them online. So I think short term, you should see some pretty favorable results, but longer term, they've got the issue that the Borders and the Barnes and Nobles of the world had with books, several years ago.
Definitely. Yeah, absolutely. Just, I mean, do we even need brick and mortar retail stores for GameStop anymore? Especially if we can just be downloading these games off of the internet. So I think that's something that they'll absolutely have to take into consideration. One retailer that I did want to ask you about, and also one of our chat room members is bringing up as well, is Walmart. They had some pretty poor guidance out of the company. I believe it was last week saying that, profits are down due to things like competition from Amazon and raising their workers' wages. And they're saying that they're not expecting any earnings growth until 2019. That's 4 years from now.
Yeah, I think it was interesting that finally Walmart has come clean on all of this. I think, several months ago when we started talking about Walmart, we were worried about the fact that the cost of fulfilling to a customer that buys online is a lot more expensive, so that hurts margins. We were talking about how all of the various states were starting to jump on
Yep, keep going.
raising the minimum wage across multiple states. And I think it's finally come home and hit them, and they had to come clean and basically state that as the Amazons of the world start to pick up more and more traction within their sweet spots, like grocery and others, they are going to have some pressure. I think it's interesting to see where Walmart is now, sitting just below 60, and they do have a very nice dividend. But I think until you start to see some additional traction from them and some true articulation of where they think they're going to grow, whether it's internationally or domestically, I don't know if they can actually do it. So until you see that, I would probably stay away.
Absolutely, great point too. Going into some of our tech stocks, how about we talk about Twitter? I mean, a lot of crazy fundamental news coming out with them. Jack Dorsey's going to be permanent CEO. They have announced these layoffs for their company. They're testing out Project Lightning right now with the Twitter Moments. What are you looking at for a long and short term for Twitter?
So Twitter, the last time we spoke about Twitter, we were talking about Project Lightning, and you said very clearly, what do we know about it? And we didn't know anything. What we do know from Moments is that it's the newspaper done digitally. I
Mm-hmm.
think it's very, very compelling. I think it's done extremely well. I think there's a lot of focus, not necessarily on tweets and where the tweets are coming from, but more so on video and it being a content platform kind of like a Snapchat discovery. So I was
Right.
actually pretty shocked by it and pretty excited by the fact that it was their first run at it. And it's just going to get better. I think I've been no fan of Jack Dorsey when I've been on the show and talked about Twitter. I
Mm-hmm.
just think it's more of the same.
Yeah.
Yes, he may have matured and he's a different person than he was before, but I just think that I don't know if he's the right choice.
It,
With that said, the market kind of disagrees with me, it seems. So I am a big fan of Twitter. I think there's no platform like it, and I think that we definitely have seen a bottom, and it should be interesting to see how their next run of earnings come out, because depending upon that, that's probably going to be how it trades for the next year or so, based on this next earnings.
Yeah, I'm kind of with you, even if I think I disagree with the market and I agree with you. And again, these thoughts are my own. They do not reflect the values or ideas of Benzinga, but I don't think Dorsey's the right decision. I think he's a founder and you can have someone be a great founder, but then he can't be, however old Twitter is, 5 years, like can't be running this company at such a different stage. And in addition, he's also trying to IPO his other company. So I don't agree with the decision to make him permanent CEO. I don't know why it took them so long to decide on just keeping him. Maybe no one else wanted the job. I don't know. This fundamental news has kind of been, in my perspective, worrisome for Twitter. These kind of things coming out, but on the other hand, what about Facebook? They haven't been doing too poorly.
Yeah, Facebook's incredible. I mean, I think they're very close to a 52-week high, or it's historic high. I have not been quiet about my belief in them as a platform and their various sub-platforms they've got, whether it's WhatsApp, Instagram, and others. I think they have the best shot within social marketing, social networking, and offline within store marketing of any of the ones that are out there today. Um, I, as a retailer, I, as a brand owner, have to be on there, and I have to run ads through them,
Mm-hmm.
regardless of whether it's for actual e-commerce dollars or it's for actual brand awareness. I think what's so interesting about them is they've come out very vocally and said, we don't necessarily want to take a portion of your e-commerce sales. We just want you to drive the transaction within our platforms. And if you drive the transaction within our platforms, that's going to drive the advertising. So they're so focused, laser focused on advertising. And they've also got a lot of confidence in the market for them not necessarily to monetize everything, tomorrow. So they've got a long leash, and they're in a good spot with the market.
We had some interesting action well, actually, can we talk about athleisure at all? Some brands that have actually been performing pretty well, things like Nike and Under Armour. Have those been showing up on your radar?
Yeah, so athleisure, I mean, I think I said the last time, we don't even call it a trend anymore. It's real. It's here.
For
I think it'll
sure.
be here. It'll be here for a while.
I had a friend
Um,
come over last night and he had just gone to Lululemon. And like, I was like, wait, they don't just sell yoga clothes there? And he's like, no, look at this like nice, like, long sleeve shirt I got. And it was a button up and it looked nice. And the fabric was like super awesome and comfortable. Blew me away. I mean, it's just like, athleisure is here.
it is. It definitely is. I think, to the names that you called out, Nike, very loud and proud, said that by 2020 they'll do 50 billion in sales. They do about
Right.
30 today. That is a huge vote of confidence. I think they are unstoppable right now. They can continue to steal market share from the Reeboks and the Adidases of the world. I think if you look at Under Armour, it's David versus Goliath. I think they're doing very, very well. I think they'll continue to do very well. And I think that there's enough spend within this category, whether it's athleisure, full athletic, to go around for many. I also think that these guys will continue to be the big marketers of the world outside of the consumer electronics companies like Apple and Samsung. So we're going to continue to hear about these guys. And sports drives a lot of apparel sales. They drive a lot of team sales. So it's going to continue, and it's a very good spot to be in right now.
A couple of last ones I wanted to get your take on, and I know this isn't like your main focus, but we did have some action from analysts coming out in the teen retail sector, and I know there was, I believe it was Urban Outfitters was upgraded, and Abercrombie and Fitch upgraded, or no, Abercrombie and Fitch was upgraded, Urban Outfitters was downgraded. Do you have any thoughts on either of these stocks?
I continue to sit back and look at Abercrombie and Fitch, and I'm not a believer. I think they've had their heyday domestically. I think internationally they still have some great brand equity, some great brand awareness, and that can be a growth platform for them. But I think the teen retailers are so tough to trade because they are the worst of the worst in terms of the most fickle spenders, the most debt-ridden spenders, and they've got, beyond the discounters, they've got the most amount of competition. The Zaras, the H&Ms of the world, the Uniqlos, the Primarks, all of these guys have come out very loud and proud against fast fashion that's here today, and it's driving a new customer. The customer of yesterday that would go into A&F and purchase $50, $60, $70, $80 jeans today goes into a Primark and a Forever 21 and purchases $10 to $20 jeans. So it's a more disposable economy, it's a more disposable consumer in the way in which they spend, and it's just not a place that I'd want to be in.
Yeah.
Urban is a bit different. Urban has not only the Urban Outfitter stores, they've got the Anthropologie, and they play with wholesale and department stores through free people. So they are a lot more broad-based in what they offer, a lot different from A&F. I do like them overall as a company. I think the management's fantastic. I think they've just been down on luck for quite some time, and they're well below their 47, 48 high that they used to be at the start of the first quarter.
Just a minute or two here left with you, Ryan. Some final words of advice for our traders and investors. What should they look out for? What should they keep an eye on when it comes to some of these retail names and the retail sector overall?
Yes. So I think if you split the two, you decouple digital from brick and mortar, I think you've got a lot of indicators that will tell us how strong of a holidays we'll have and how soon the holidays will start to hit spending-wise. The first thing that I love to follow within the digital world is Channel Advisor provides a same-store sales number for the big guys like Amazon and eBay. And that gives me a good indication of where the sales are in the preceding month. So definitely look out for that as an indicator. And then the second thing is just follow the census data. The census data for brick and mortar clearly articulates where the spend is going, into what classifications. If you've got big ticket blowing up, then you know that, if you're not seeing it transition down to apparel or into food services, you kind of know exactly where the spend's going, and you kind of know which retailers are going to do best within those particular classifications. So follow those two things as leading indicators, and I think you should do well as long as you're buying the best names within those classifications.
We've been on the line with Ryan Craver. He is our retail expert as well as the Senior Vice President of Emerging Brands and Digital at Lamour Group. Ryan, thank you so much for joining us on the show this morning. We'll have to bring you on again next month to talk about retail.
Awesome. Thanks, Brianna. Have a great day.
You do the same.